Good Wednesday morning. Welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. I am so jacked up for today's show. I put on a suit and I can't take it. I am moments away from an exclusive interview with CrowdStrike founder and CEO George Kurtz. George has come out swinging this year with some big, giant deals as he looks to keep the stock hot. Shares are up 38% in the past year. But before that chat, here's what's top of mind for me right now. Tracking those banks. The nation's biggest banks aren't exactly blowing minds with their earnings so far this week, but they are doing just enough to keep the bulls enticed. Long struggling Wells Fargo beat profit estimates with good showings in its credit card and auto businesses. Bank of America earnings came in above estimates, as well as on the back of strength in wealth management, card and stock trading. Similar to JP Morgan on Monday, BofA and Wells Fargo showing weakness in their investment banking business as deal activity gets pushed out. Citi, the outlier here, and I'm really surprised to see this, reporting a 38% increase in its investment banking business. Advisory fees surged 84%. And the shine keeps on brightening. Commodities have extended their huge start to the year with gold, silver, copper, and tin. Yes, tin. All hitting record highs. Rate cut bets, the Trump administration's Fed fight, demand for metals to build AI data centers, all contributing to the rip your face off rally in commodities. Dare I say we are witnessing a super cycle. I just said it. Saks goes bust. Luxury department store retailer Saks has filed for bankruptcy, crippled under a mountain of debt related to its horrible acquisition of rival Neiman Marcus in 2024. Both of these retailers have struggled for years. So why in the world did one think putting them together would be such a fabulous idea? I mean, this stuff looks great in a slide deck put together by an associate, but slide decks don't often reflect reality. They reflect grand visions of overly optimistic executives. And if you aren't watching Google's story, you need to wake the hell up. The stock is already up 7.5% this year, and the company's market cap has settled in above $4 trillion. In short, Google is the new AI market darling. ... Sorry, NVIDIA. Google is winning big business for its AI chips, just scored a huge deal with Apple, and is out executing OpenAI on the model front. What else can you ask for in an AI stock play? Now the street just has to catch up with its EPS estimates, and I have more on that in an article now on the Yahoo Finance homepage. Click on that and share it with your friends. Here on the Opening Bid Roundtable, Art Hogan, B. Riley Wealth Chief Market Strategist, alongside senior reporters Brooke DePalma and Ines Ferre. Art, buy or sell, hold the banks. What'd you like in these numbers? What didn't you like?
Yeah, I'll tell you, the only negative point was really investment banking. Investment banking is really complicated by the government shutdown. So you really had deals that had to get pushed out because you couldn't get registrations through. I think that just pushes those revenues out to the next quarter. So I think the banks, the financials in general, are going to be one of the best buys this year, and I would use any pullbacks as a buying opportunity here. And
Ez, what did you see in some of these bank results? I am surprised, for example, that Citigroup put up a 38% increase in investment banking when even at JP Morgan, they did not have a good quarter in investment banking.
No, what I felt was the most important headline, at least looking at it from it was the fact that a Citi CFO followed a JP Morgan CFO in commentary about the cap on credit card rates. I thought that was very telling. Yesterday we talked about this as well, that more CEOs or executives would be coming out and talking about this, with Mark Mason basically saying that he wants to cooperate with President Trump on affordability, but that a cap would likely cause a significant slowdown in the economy. This is gentle pushback on some of the affordability initiatives from the Trump administration.
And as I'm giving the win here in the battle of the CFOs for banks to JP Morgan CEO Jeremy Barnum, he hopped on a media call yesterday and he said this would be very bad. These credit card caps would be very bad. I think Jeremy was out there a little more aggressive. Hat tip to you, Jeremy. Love to hear the straight talk. Brooke, in these bank results, credit card and debit card, whether it was JP Morgan, BofA, Citigroup, good read-through for the consumer. All those results were strong.
Certainly, and what we can continue to hear from these banks is that despite consumer sentiment being relatively near record lows, albeit a bit of an uptick back in December, Americans continue to put more and more on their credit cards. Their willingness to spend, willingness to splurge, especially over the holiday season, is what we continue to see. One thing worth pointing out is I did take a look at Bank of America's key U.S. credit card loan metrics. 1.5% in the fourth quarter was 90 plus days past due. That compares to 1.4% in the third quarter and also to 1.6% in the fourth quarter of last year. So just really 0.1% lower lower year over year when you think about that 90 days past due. But what we see is continuation of this record credit card spend. Americans continue to be quite resilient. That's what Citi CFO also said and was telling reporters this morning as well. Despite all this pessimism around tariffs, around what that would mean for consumer spending, around how Americans feel about the job market, it ended the year by Americans continuing to be resilient, continuing to spend, and willing to put more and more on their credit cards.
Art, last word to you on the banks. Favorite bank stock and why?
JP Morgan, I think it's on a valuation basis, probably the setup is perfect coming in here. I think they're least affected by the credit card 10% cap, and I certainly think that a lot of that business that they weren't able to get accomplished last quarter comes into this quarter.
All right, let's keep it moving here and focusing on commodities. Art, staying with you, you think we are in the start of a commodities super cycle? And if you do think that, as I think so, I think that we are, how long could this last?
Well, I'll tell you this, if you take a step back and say, how long did it not move, right? So gold broke out of a 12-year base a year and a half ago, but on an inflation-adjusted basis, it broke out of a 40-year base. So momentum players have finally noticed that gold can actually go higher after years of doing nothing. Central banks continue to buy it. You certainly have an ease of use with the GLD ETF, and across the board, aging demographic would rather have that as their diversifier than cryptocurrency. So I think the precious metals, industrial metals complex is just at the beginning of this rally, and we continue to see this through this year. I don't think we're going to have the kind of performance we saw last year on both gold and silver, but I certainly think it's going to outperform the S&P 500.
Inez, I didn't think I was going to start my day today at 2:40 a.m. reading a story on our site about a rally in tin. I can't remember the last time I talked about tin prices.
I know. Supply constraints, Indonesia also putting some curbs on tin mining. But look, the metals complex in general has been parabolic. You're looking at silver that's above $90 per ounce. Traders are talking about $100 per ounce for silver. Watch out with these levels because this has been a huge rally. Silver up 20% in the last 2 weeks. You're looking at tin that's also up more than 37% year to date. And then you've got copper that's also at all-time highs. Look, so much of this has started with gold expecting lower rates, and you've got the Fed independence issue and geopolitical issues, but also you're looking at traders talking about a metals war and supply constraints, and also concerns about tariffs on imports of some of these metals, like copper, for example. So all of this is driving this huge rally, but you've got a lot of shorts on some of these because you've got bets that as much as it went up, that it will also come down.
Inez, do they still use tin in food cans? I'm trying to figure out how much my Campbell's soup's going up.
Yeah, I'm not sure if they're still using tin. Brooke probably would know on that one, but tin is definitely used a lot in everything that we're talking about, onshoring, data centers, electronics. All of these base metals are very important for these industries.
Brooke, we asked the hard questions here on the opening bid roundtable. Do they use tin in Campbell's soup cans?
Brian, last I heard, more so aluminum and was what they were talking about on their earnings call, being impacted by tariffs.
Poor Art being sucked into this stuff. Thanks for being a good sport. Brooke, I'm going to stay with you. I posted a very brief and simple post on my Instagram account this morning, 31 seconds on why Saks essentially filed for bankruptcy. You're going to have to finer details on this than me, but I made it very clear. I just can't remember the last time that I went into a Saks. And that last time I went to a Saks, rest assured that I didn't buy anything. It has not been a good customer experience. The inventory is not where it needs to be, and they're just saddled with debt.
Brian, keep in mind, it's not just Saks Fifth Avenue. It's also Neiman Marcus. It's Last Call. It's a slew of different brands that operate under Saks Global that did file for bankruptcy. And it really comes after they struggled to pay off that $2.7 billion acquisition of Neiman Marcus that closed in late 2024. And then, based upon what we're hearing as of the latest, that led to a $100 million missed interest payment. And so that's really where we're seeing this now securing of a $1.75 billion financing commitment within this Chapter 11 bankruptcy. And this really comes at a time, as you just said it yourself, Americans have just so much more, a plethora of other opportunities to go and shop. Warehouse and off-price and thrift stores are on the rise, but also think about those other retailers that have really merged since Saks Fifth Avenue was that go-to. And so really, as former Neiman Marcus CEO now takes the helm after a double CEO departure over the last few weeks alone, there's going to be a need to innovate and to modernize these stores under this portfolio.
And a belated thank you to the Yahoo Finance producer team. I don't know where the hell they found that tin chart, but that is good stuff. Art, back to you on Saks here. I thought a higher stock market meant rich people were going to go head to Saks and buy handbags.
Yeah, I think rich people have moved on from Saks and Neiman Marcus. I think rich people are just as choiceful as consumers over the course of the last 5 years. And I certainly think putting Saks and Neiman Marcus together, as you said at the open, was like tying two rocks together to see if they would float. So it was a bad idea from the start, and saddled with that, this is the end result.
Do you view the bankruptcy of Saks as indicative of more to come in the retail space this year? I would say more on the lower end because of pressure on that consumer with regards to various prices for food and other daily necessities.
Yeah, I'll tell you this. If you look at the last 12 months and the retailers that have done well, it's the off-price folks like the TJX of the world, one of the best performing retailers out there. You continue to see Walmart and Costco do very well. So I think if you're going to focus on retailers this year, I think, again, you want to look and understand that the choiceful consumer is going to continue to look for bargains, and they're out there to be had. TJX is one of our favorite names.
Also a name that has been a favorite of market goers this year and since the fall, really, Ines, has been Google. Google's shares have been on fire. Everything seems to be going this company's way right now.
Yeah, their chips, their Gemini, everything it has outperformed. I mean, over the last 2 quarters, so to speak, it just suddenly zoomed up higher. I will also note that, yes, last year, Google was the outperformer among the Mag 7. It is still expected to continue to outperform. But also take a look at Amazon, Sozzi, because we are talking to strategists that are saying that the same kind of move up that you saw in Google, you could see in also Amazon, because they're bullish on AWS, on agentic AI, spurring growth in AWS, on their logistics push, robotics. Robots are going to be the theme of this year, and also Alexa. So Amazon, which last year was only up 5%, that's expected to be the next Google this year.
Oh, Ines, I love when you get in front of these trades. That is big. When Amazon finishes the year up 170%, I'm going to congratulate you and buy you a coffee. Art, over to you on Google. What's the best way to play AI at this point? Do you still go with NVIDIA? You know what NVIDIA is going to do this year, going to be a big year for them, or do you ride momentum with Google?
Well, I think you have to take the step back and say, how did Google get here? First and foremost, they won the case with Apple about being able to have the dominant search on Apple product, and then they cut a deal with Apple. That much more important. We're talking about tens of billions of dollars on a quarterly basis. I think they also are winning the race as it comes to the best chatbot, right? So it's Gemini number 1 and OpenAI is number 2. That doesn't necessarily continue into this year. So I would be careful picking winners in what's going to be a much longer artificial intelligence race. I think NVIDIA at the current multiple probably the cheapest way to play out artificial intelligence, and they're not going anywhere.
Real quick, to answer this tin debate, our very own Jared Blickery, our data master, says Campbell's soup cans are made from steel, often referred to as tin cans because they are coated with a thin layer of tin. Thank you, Jared. That is news you could use on this Wednesday morning. Big thanks to the opening bid roundtable. Appreciate it. All right, cybersecurity giant CrowdStrike has come out swinging this year with a series of big deals. CrowdStrike's founder and CEO George Kurtz hops to the mic for an exclusive interview with me on the why behind all these deals. We'll be right back. CrowdStrike is wasting no time this year striking at its competitors in the surging cybersecurity market by opening its checkbook wide to make several strategic deals. On Monday, CrowdStrike announced an agreement to purchase Serifix Security, a browser runtime security provider. This follows last week's purchase of cybersecurity startup SGNL, I'm calling it Signal. The deal is slated to help users of CrowdStrike's trademark Falcon security platform better manage human and AI identity access requests and other real-time risks. In the Yahoo Finance exclusive, I have CrowdStrike founder and CEO George Kurtz back in the house. George, always nice to see you. Right out of the jump here, what's the why behind some of these deals? They're quite large.
Well, you're talking about 1.1 billion, in the last week that we announced. And why did we announce these two acquisitions together, Serifix and Signal? Let me first start with identity is really the new perimeter, which is what Signal actually aims to protect against these identity attacks. And the browser is the front door. 85% of the work that people do is in the browser. So the idea by combining these assets along with Falcon Shield and some of the other acquisitions that we've done in the past gives us really next-gen identity platform that will allow our customers to be continuously evaluated, their users, and based upon the intent of what they're doing in the browser, making sure they're going to the right place with the right level of privileges. Part of the challenge that you have in the industry, Brian, is that the industry is focused on standing privileges. So when you get access in Yahoo, you essentially get access and then it has to be managed. With Signal, it's zero access, zero standing privileges, meaning you only get access when you need to do something you should be doing. So we're totally turning the identity market on its head with this acquisition.
What's your assessment of the valuations? When you went out and you're in the trenches getting deals like this done, what's your sense of what you paid given, relative to the expectations for the business?
Well, I mean, this is a discussion that I have all the time. There isn't a week that goes by that I don't hear from a banker or some company that wants to sell themselves to us. And we're pretty rigorous on how we think about companies. It has to be great tech and great teams, and it's got to be at the right price. The valuations are lofty, but when you look at what these companies can add to CrowdStrike, we think it's a real win for CrowdStrike and its shareholders. The challenge in this industry, though, is you've got these zombicorns that are, 3, 4, 5, 6, 8 billion with not a lot of ARR, and they're just going to be in a position that's going to be very difficult to get public or be bought. So we like to buy the companies at the right time. Again, right team. We have 2 great teams here and fantastic technologies.
You've been aggressive on the acquisition front. These deals, a couple deals you made last year too. Is there a more acquisition opportunities ahead? Because clearly you're leaning into a pretty strong pivot in the industry.
Well, we're always looking for, again, great acquisitions that fit the strategy. It's as important to tell people what we do as what we don't do. There's a whole bunch of things that we're not going to do, but as one of the largest security platform players in the market, it's about driving value for our customers and giving them the outcomes they're looking for, which is stopping the breach. People want to stop the breach and they want less complexity and they want to lower their cost. It's a very simple formula. We've been able to do that with 30 plus modules. You've seen the results from our Falcon Flex licensing, which is, again, I think we turned the industry on its head with that. We have a lot of competitors trying to copy it, but it allows the entire platform to be available to our customers. It removes the friction from procurement, and it really drives further adoption and attach rates within the platform. So when we find great technologies that fit a customer need, again, there's a lot of things we can build, but if we've got great teams and technology, we'll get them at the right time, and then we'll put them into our go-to-market machine, which is a machine, and then we let them run.
George, what's your biggest fear with how fast these AI agents are getting rolled out inside of very large public companies, but also very large private companies?
Well, the challenge that you have with some of these AI agents, it's like giving full access to a drunken intern. I mean, who knows what they're going to do, right? So you have to put a lot of guardrails around the agents. AI and AI agents are going to change the world. There's no doubt about that, but that has to be done in a secure way that minimizes risk to the business and provides a level of compliance. One of the deals that we did last year was a company called Pangea, which really is defining AI detection and response, right? So being able to understand what the AI is trying to do, being able to put guardrails around it, being able to make sure it has the right non-human identity, which again ties into acquisitions like Signal, and it provides a way for companies to harness AI in a secure fashion with auditability, with compliance, and minimizing risk to the business.
We're seeing a real boom in this country, George, with AI data center build-outs. I mean, not a day seems to go by where I don't see another deal being announced to build an AI data center somewhere in this country. What is the risks that are starting to pile up to our infrastructure in terms of potential attacks as we build out this infrastructure?
Well, infrastructure and its related components has been a risk well before AI. If you look at the power grid, if you look at water systems, if you look at radio systems and satellites, these are all fragile type systems. And again, the adversaries, I think China, I think Russia, et cetera, are focused on exploiting these weaknesses in the infrastructure. A lot of the infrastructure, as you know, is not owned by the government. It's owned by private companies. Sometimes they don't invest enough in security. So it represents a real risk. And if all our eggs in the AI basket, we got to make sure that we protect those data centers and we protect the AI. And this is the key thing, from a CrowdStrike and a shareholder perspective. The more AI that is introduced, the more security that's going to be needed. It's that simple. And if we believe there's going to be more AI in the next 5 years, which I do, you're going to have more security, and you're going to see an explosion of security to protect all of the use cases around AI.
Lastly, George, we've seen the current administration focus on really running a more efficient government. Has that more frugal mindset trickled down to the cybersecurity industry?
Well, yeah, I love it. We do work with the government, and I think for the first time we're seeing the government really act like a business, which is fantastic. I think the administration is doing a great job trying to essentially reduce costs, reduce complexity, and get better outcomes. So that's what we're doing for our government customers, whether it's federal, whether it's state, whether it's local. Everyone wants the same thing. They want better outcomes because they know the threat vectors are just increasing. AI is minting new adversaries, and they want to do it without cost and complexity. And there's a reason why CrowdStrike has been successful. We're delivering on that promise with the single agent, single platform architecture, and now it gets even better with the acquisitions I just announced.
George, always great to see you. Congrats on these big deals. Looking forward to catching up again soon. Appreciate it.
Thank you so much.
All right, what I didn't talk with George about today is his recent purchase of a stake in the storied Mercedes-Benz F1 team. George is a competitive racer when he isn't making big deals as CEO of CrowdStrike, so this is one opportunity he couldn't pass up. For more on George's life beyond the C-suite, I talked to him at length a few weeks ago on my Opening Bid Unfiltered podcast. You can give that a listen on Spotify, Apple Music, Amazon Music, and iHeartRadio. Coming up, Julie Hyman has you on Market Catalyst.